Now students, we need to see that whensoever a chargeable asset is gonna be sold by a UK resident individual, then how the gain or loss will be calculated. So technically I'm going to take you people to the capital gains format, and once we come to know that how the gain or loss is calculated, then definitely I'll discuss that how the taxes are computed. So where a chargeable asset is going to be sold off, we need to see that what are the disposal proceeds. I mean, for how much figure, for how much consideration the asset has been sold. But where there is going to be a transaction happening in between two connected persons for a value which is found to be below the market value of the asset at the point of disposal, then market value shall prevail. I mean, market value shall be taken into account rather than the disposal proceed. So again, whensoever a non-current asset, a chargeable asset precisely, is going to be sold, we need to see that how much consideration is received, that is said to be the disposal proceeds. But in those cases where the transaction is going to take place in between connected persons over a value which is found to be lower than the market value of the asset at its disposal point, then at such points the market value shall be taken as disposal proceeds. Now, once we have seen that what the disposal proceed is, we need to see that how much cost has been incurred by the donor of the asset, by the person who is selling off the asset, who is going to dispose of the asset in order to make the sale possible. So for instance, if I am a UK resident person and I am going to sell off my chargeable asset, if I am going to dispose of my chargeable asset, I need to see that how much cost I have made in order to incur the sale, in order to make the sale happen. So whatsoever the cost I have incurred, whatsoever the expense I have expensed out for the sake of sale, that is deductible against disposal proceed in order to see that what our net proceeds are. I mean, for instance, if in order to dispose of my chargeable asset, I had incurred any sort of carriage cost, or if I might have paid any legal fee or advertisement fee for the sake of making the sale happen, or if some agent, I mean estate agent, was involved in order to sell off my chargeable asset, and later when the asset was sold, a fee was to be paid to that agent, then these all are the expenses which were incurred for the sake of making the sale. I mean, these expenses were directly related to the activity of sale. So is the case with sales commission, because you might involve people in order to make your sale possible, and for that purpose you ask them to do this activity over some commission. So when the activity is done, when the chargeable asset is disposed of, you have to pay the commission. So all those costs which the individual has to pay for the sake of making the disposal, that is said to be the incidental cost of disposal or incidental cost of sale, and that is going to get deducted against disposal proceed. So for instance, if I am going to sell off an asset for £100,000, in order to sell the asset for £100,000, I have incurred a cost of £5,000. That would mean in order to generate £100,000, I have paid £5,000. That means the amount that is generated on net basis is of £95,000. So once you have determined that what the net proceeds are, you need to see that how much cost was incurred over the asset, over the chargeable asset in the past. I mean, we need to see all the capital expenditures, all the asset expenditures, as in what was the purchase price of the asset, or where the asset was constructed, then precisely what had been the construction cost of the asset. Then we need to see that what had been the incidental cost of purchase. I mean, how much cost has been incurred for the sake of making the purchase possible, and how much improvement related expenditures were incurred over the asset. So, either to improve the value of the asset or to extend or enhance the value of asset. Whatsoever the expense is done that is said to be the capital expenditure or asset expenditure, that is also to be taken into account. That would mean that whensoever an asset is going to be disposed of, we need to see that how much cost is associated with the asset, as in its purchase price, the price that we have paid in order to purchase the asset. And by the way, the examples are exactly the same as what we have seen in the case of incidental cost of disposal. I mean, if we wanted to purchase an asset and at the time of purchasing of an asset we may have paid certain sort of carriage cost, or there could be a chance that for the sake of purchasing a chargeable asset we may have paid a legal cost, we might have paid an advertisement cost, or we might have involved an agent for the sake of purchasing the chargeable asset to whom we have paid certain sort of fee or the commission. So any expense that is associated with the purchasing activity of a chargeable asset is said to be the incidental cost of purchase. So not just the purchase price of the asset is important, all the expenses which have been incurred alongside the purchasing activity are to be taken into account as well, because these all are the expenses which are capitalized. So whensoever you are dealing with the non-current asset, with the capital assets, with the chargeable assets precisely, you need to consider all such costs. And similarly, if after purchasing the asset you might have to either improve or enhance the value of the asset, and for that purpose you had incurred certain sort of asset expenditure, the capital expenditure, that's also going to be considered as the relevant expenses, as those expenses which are relevant for the sake of computing your gain. So on one hand you must have seen that what had been your net proceeds are, I mean what you have earned as an activity of the disposal of this asset, and then when you are going to compare it with the cost that you have incurred over the asset, which includes these three elements, you will come to know that whether you have generated something in excess of the cost of an asset, I mean whether you have made a gain on the disposal of chargeable asset, or where you have generated net proceeds which are pretty much lower as compared to the cost that was spent on the asset. This would mean that you have made a loss on the disposal of asset. So technically you will be comparing the net proceeds that you have received over the disposal of a non-current asset and comparing it with the cost that you have incurred on such asset. If the proceeds are higher than the cost, that means you have made a gain. But where the cost is said to be higher than the disposal, then that means that you have made a loss. By the way, whenever you are going to dispose of a chargeable asset, you will only be focusing on the capital expenses and you will not be considering any routine expenditure for the sake of computing your capital gain. I mean, any sort of revenue expenditure, which we simply call as expenses, they are not to be taken into account while calculating your capital gain. For instance, whatsoever the repair expense, maintenance expense, insurance expense, I mean any expense which is of routine expense in nature, which is said to be a revenue expense, that is not to be treated while calculating your capital gains. So that's how all the assets which are sold in the tax year are going to get calculated, and whether the asset is like sold over a gain or a loss, first of all they are going to get netted off against each other, after which HMRC gives us an advantage. HMRC gives an individual an allowance which is said to be an annual exemption of £6,000. So that means that if all the assets which have been sold in the tax years, their net figure, if the net figure of the gains for the whole year is found to be either equivalent to or less than £6,000, there is said to be an exemption. There is said to be an annual exemption, as government says that no tax liability will have to be paid in this case. But where the overall gains in the tax year would be found in excess of £6,000, then the excess amount is like said to be the taxable gain on which capital gains tax liability for an individual
shall have to be calculated. See, this annual exemption is just like a personal allowance, because when an individual earns from taxable sources in the tax year, there is said to be an implication of personal allowance for the tax year, which is of £12,570, as till this amount no one is supposed to pay income tax liability. But if the taxable income is going to exceed the personal allowance figure, then on the excessive figure, income tax liability shall have to be calculated. And similarly, when it comes to capital gains tax computation, there is said to be an implication of annual exemption of £6,000, which means that if your overall gains for the tax year would be of either equivalent to or less than £6,000, there is said to be no CGT implication at all. But if your gains figure would be crossing the threshold of £6,000, then on an excess figure, CGT liability shall have to be computed, and this excess figure is called a taxable gain. Now, what are the CGT rates? Surprisingly, as you already know, that when we calculate income tax liability, we tend to use basic rate band, high rate band, and additional rate band. And what is the sequence? We take a start with non-savings income, then we move to savings income, and afterwards we move to dividends income. And similarly, once the dividend income is taken into account for the sake of computing income tax liability, whatsoever the band is left, that is going to be utilized for the sake of calculating capital gains tax liability. So when the income tax liability is gonna get computed, we would assess whether something is left in the basic rate band. If yes, then on the gains which are going to fall in the basic rate band, there would be applying a CGT rate of 10%. But if the gains are not going to get covered in the basic rate band, then whether they'll be like falling in the higher band or additional band, there is said to be an implication of CGT at the rate of 20%. So, when the taxable gain is determined after deducting the annual exemption figure of £6,000 in the tax year, we will have to see that if the gain is going to get accommodated in the basic rate band, then the rate of 10% will have to be applied. Otherwise, on the excessive gains, a high rate of 20% shall have to be applied. But there is one exceptional thing. If the asset that has been sold by an individual is a residential property, then the rates are going to get changed. And in that case, if the gain is like going to fall, which is like relevant to residential property, if it is going to fall in the basic rate band, then instead of 10%, the rate of 18% shall have to apply. And similarly, if the taxable gain figure would be belonging to the disposal of residential property, then in such cases where the gain is going to fall in the high rate band, the tax rate is going to be of 28% instead of 20%. But this is just the case when residential property is sold. Except for this disposal, all the assets, when they are sold, they usually get caught under the basic rate of 10% and high rate of 20%. And now onwards, I am going to tell you the normal situations where the basic rate of 10% and high rate of 20% shall have to apply. And the residential property tax implication will be discussed in the last of this chapter.
So let's consider an example of a UK resident individual who is going to make a disposal in the tax year 23-24. Keep this thing in mind that whensoever individuals have to compute their income tax liability, they use the tax year. And similarly, from 6th April to 5th April, with the reference to the tax year, the individual has to compute capital gains tax as well. So tax year is basically the base year for which either the income tax liability or the capital gains tax liability for the individuals are calculated. By the way, there is an important additional information is given that the taxable person of this UK resident individual is £35,000. What is meant by a taxable income or taxable amount? You must be familiar with this word. Let me recall this thing, do you remember that when the income tax liability is to be calculated, this is calculated according to the tax year, and whensoever the income tax liability has to be computed, how many columns do we have to make? Of course, 3: non-saving, saving and dividend. The first step is segregation of income into non-saving, saving and dividend column. Then we come across the second step, which is deduction of interest paid on qualifying loans. And afterwards, we apply the third step, which is deduction of personal allowance. Once personal allowance is deducted, then the value which is left behind, that's an important one, and this is said to be the taxable income. On taxable income or taxable amount, we will apply income tax rates, which are which have already been discussed. As far as, if you remember, non-saving and saving rates are concerned, they were pretty much same, but the rates were different when it comes to dividend. And we all know that first of all, the rates are to be applied on non-savings income, then we apply the tax rates on taxable figure of savings, and afterwards the tax rates are to be applied on taxable income of dividend. And in this question, it is said that the overall taxable income of this individual is of £35,000. I mean, if we consider the taxable income of non-saving, saving and dividend, that is of £35,000. I mean, this person is a basic rate taxpayer as far as his taxable income is concerned. And in fact, I can also say that this person has not used his basic rate band completely. A little bit proportion of the basic rate band is still left. Now, after this information, let's say this UK resident individual has sold his 3 non-current assets. I should precisely say he has sold his 3 chargeable assets. Let's say the first asset has been sold for £60,000. The first chargeable asset was supposedly his building, which was sold for £60,000. His office building was sold for £60,000. And in order to make this disposal happen, he has incurred incidental cost of disposal of, for instance, £3,000. So, how much money he has made as a result of this disposal activity? I mean, how much is the net proceeds figure? This is of £57,000. Now, we have considered that what is the net proceed figure? We need to see that how much expenditures have been incurred on this asset, because we will be comparing the cost associated with this asset, and by deducting all such expenses, we need to see that whether we have made a gain on the disposal activity or loss. So let's say this building was purchased for £30,000. Incidental cost of purchase of £2,000 was incurred on this asset, and capital expenditure of £5,000 was also associated with this asset. So now I'm going to compare that is equal to sum brackets open. Though 57,000 was the net figure received as a disposal activity of this small office building, we need to see that how much cost is associated with this asset. I mean, how much has been its purchase price, its incidental cost of purchase and capital expenditure. And there I come to know that we have generated gain of £20,000 on the disposal of this chargeable asset. Now, if any other asset or assets are disposed of by the same person in this tax year, we need to compute the other gains or losses as well. So let's say the second chargeable asset was his land, which he sold for £50,000, and he had incurred an incidental cost of disposal of £5,000 over it, and thereby the net proceeds that he has received over the disposal of this land is of £45,000. Then let's assume in order to purchase this piece of land, he had incurred an expense of 34,000 pound, incidental cost of 1,000 pound was incurred on this asset, and let's suppose he did not incur any capital expenditure, because that's not always the case that one will be incurring each and every type of expense over the chargeable asset. So that's how we can say that over the disposal activity of this land, he has generated a gain of 10,000 pounds. Now, this person has sold another chargeable asset in the same taxi as well, which has to be computed right now, because all the disposals which are made in the same tax years are to be computed. But see, I am doing the calculation one by one. I mean, all assets gain or loss figure is going to be calculated separately. So I'm just going to take a start with the third asset. The third asset is, let's suppose, his furniture, and it's been sold for 20,000 pound, and he did not have to incur any incidental cost at the point of disposal. So net proceeds are same, they are of 20,000 pounds. This asset was purchased for, let's say, 26,000 pound, and by the way, let's suppose we did not have incurred any incidental cost of purchase or capital expenditure on this asset. So this asset has been sold over a loss of 6,000 pound. So once again, the format of computing a gain or loss is like pretty much straight and very simple. But keep this thing in mind that all those assets which have been sold by a UK resident individuals in the same tax years are to be calculated first. And then I am going to see that how many assets have been sold on gain. I mean, there are two assets which have been sold over a gain. The first asset is sold for a gain of 20,000, while the second asset has been sold over a gain of 10,000. So first of all, I'm just going to add up the gains related to the disposal of multiple assets. So it's like 20,000 plus 10,000. Overall gain figure is of 30,000, and then I need to see that if there is a disposal of any asset on loss, which you can easily see that there is an asset sold for a loss of 6,000 pound. Now I am going to net off the gains and losses with each other. I mean, multiple assets were sold, few were sold for gain, and there was an asset which was sold over a loss as well. So current year gains and current year losses, I mean, in the same tax year, whatsoever the assets were sold for a gain and losses, they are going to be netted off against each other. And that's how we come to know what our net chargeable gain, net capital gain is. So the net figure is of 24,000 pounds. That's very much clear. And then, do you remember what is to be done now? Now we need to see.
And I hope you remember that once we come to know that what the net chargeable gain is, after that we have to deduct the annual exemption amount of 6,000 pound. So let's see that against 24,000 pound being the net chargeable gain figure, we are going to deduct an annual exempt amount of 6,000 pound in order to determine that what is an excessive figure. So the excess amount is of 18,000 pound, and that is like said to be the taxable gain figure. This is the gain on which CGT liability has to be computed, and what I've already told you that the rates of CGT are dependent upon the basic rate band. So first of all, the basic rate band will have to be used by non-saving income, for which I just hope that you remember the rates. For non-saving, the rate is 20% in the basic rate band. It goes to 40% in higher band, and then it becomes 45% in additional rate band. So is the case with savings income, and later we apply the rates on dividend income, and then the rates on CGT will have to be applied where. So if the gain is going to fall in the basic rate band, there is said to be an implication of 10% rate, while on the excessive gains, the rate of 20% shall have to be applied. So see, as what I've told you in this example, that this person has a taxable income of 35,000 pound. I mean, his taxable figure which would have been determined after deducting personal allowance against his net income for non-saving, saving and dividend was of £35,000. So he's just left with £2,700. And what is his taxable gain? Yes, it is of 18,000. So out of £18,000, 2,700 is going to be covered under the basic rate band, where the rate is just of 10%. So that would be of £270. While the remaining gains, out of 18,000, as £2,700 has already been taxed under the basic rate band, the remaining gains are going to get taxed over a high rate of 20%. So this would be of £3,060. So altogether, 270 and 3060, triple 30, £3,330 is said to be our capital gains tax liability for the current tax year. Now, the next important thing is that if this is the capital gains tax liability for an individual, then when this liability will have to be paid? See, normally the due date for payment of capital gains tax liability is 31st of January after the tax year. So if the tax year is 23-24, then after this date, 31st January would appear on 31st January 2025. So 31st January 2025 is the due date for the payment of capital gains tax liability. I hope you would remember that this date is the same as what we use for the sake of online filing of tax return. And by the way, when I say income tax return, the same return is used for filing of capital gains tax information as well. So technically, income tax as well as capital gains tax filing shall have to be done on online basis by 31st of January after the tax year. Exactly on the same date. And I hope you must remember that income tax payable as well as NIC for payable balancing figure is also going to be paid on the same date. And along with that, NIC class 2 is going to be payable by the same date as well, which is 31st of January after the end of tax year. So wow, this 31st January after the tax year is very important date, as on this date, so many obligations are to be fulfilled, just like this, where the capital gains tax liability will have to be paid. But why did I say the normal due date? As later in this chapter, I will tell you that when the residential property is sold, there tends to be a change in the due date of payment of capital gains tax liability. But that is going to be discussed later, and that is only relevant to the situation when UK residential property is sold. But apart from that, the normal due date for the payment of capital gains tax liability is 31st of January after the tax year, which for this tax year of 23-24 would be due on 31st of January 2025.